Welcome to the 37th installment in Trading Strategy Guide's Trading Education Series. Today we're going to look at trend following for a nice wealth generating system, including a trading strategy. Stay right where you are. Hi, this is Tim from TradingStrategyGuides.com. Thanks for coming back for this installment of our Trading Education Series. In today's video, we're going to discuss how to use the simple technique of trend following to generate wealth over time. We'll also include a great trend following trading strategy. Did you ever ask yourself how it's possible to grow your trading account and achieve financial freedom through trading? A lot of newcomers in this business want to learn trading techniques to make money right away. But you know, trading is no get-rich-quick scheme. And if you think of it that way, you're likely to turn it into a quick blow-out-your-trading account scheme. I'm speaking from experience here. What I'm saying is that if you want to achieve your goals, you need to have the right mindset for building wealth. You need to remember my trading maxim: trading is a marathon, not a sprint. A trader with the right mindset will plan his monetary goals over a bigger time horizon, the next 5 years or more. The best type of trading process to really build wealth through trading is applying trend following technique. A trend trader needs to find the environment that is most ideally suited to follow through with a series of higher highs and higher lows, or with a series of lower lows and lower highs. This might sound very basic, but in essence, trend following is the easiest way to maximize your trades in the long run. So let's take a look at this example. Let's assume your account balance is $10,000 and your trend following strategy is able to yield 30% yearly return. Over the next 5 years, your net profit will be almost $128,000. The only way you can achieve this kind of outstanding return with a less stressful approach is by using trend following strategies. You know, I really suck at predicting the future, especially since my crystal ball always seems to be in the shop, and that includes forecasting the market. Of course, you can forecast the market and be right occasionally, but doing it consistently is pretty tough. The only way to accurately forecast future trends is by not forecasting future trends, but instead waiting for a trend to develop and following that trend. So, guess what trend following is all about? Did you guess it? It's following the trend. I know that was a pretty tough one, right? Trend following is not about predicting the next uptrend or downtrend. We don't even try to do that. Our plan is to be responsive to the current price structure and react once we see a trend in the making. The trend is your friend is an old trading axiom that has proven to be right over many decades. Most hedge fund managers and big money institutions, otherwise known as the smart money traders, use trend following strategies because firstly, they are looking to invest in bigger trends, and secondly, they manage large sums of money, so they need to operate on the higher time frames to move such a large amount of money. Now that you have an understanding of what trend following is, let's take one step further and look into the requirements of a trend following system. In order to employ a trend following system, first you need a proper set of rules that can help you identify the current market trend. This will make sure you're able to identify the trend in its early stage of development and you don't get in too early. The good news is that you should already be familiar with the process of trend determination. As per the rules discussed in Module 2, we look at the swing high and low structure to determine the direction of the trend. Now, to take it one step further, the first axiom of a trend following system is buy low, sell high. It's the number one most basic rule there is in real estate market, stock market, any investment vehicle, including the Forex currency market. Buy low and sell high. I know it's pretty obvious, but we got to put it out there to make sure everyone gets it. When trading the financial markets, you need to adopt this mindset in order to make a profit. It is important not just to know the rule, but you actually need to understand it and implement it in your trading. We judge the current market price as being high or low relative to the historical price. If the trend is up, and if we adopt a trend following strategy, we buy. However, the problem is that the price should already be high once we identify the trend. Remember, we don't predict the trend, we let it develop and use our trend identification tools to spot the trend. So, if we buy, it might look like we're buying high, which is in contradiction with our trend following principle, buy low, sell high. Remember, we define price as high or low relative to the historical price. So if we correctly identify the development of a new uptrend, at first it might look like we're buying high, or selling low in a downtrend. But if we're correct in our analysis, a new larger trend is developing, and as we move higher and higher, the price we bought at will no longer look high, but relative to the new current price, it will actually look to be a very good low entry price. And of course, if the trend is down and we adopt a trend following strategy, we sell. As you already know, in a downtrend, no price is too low to sell. Trend following traders believe that once a trend is put in motion, either up or down, it will continue to stay in motion for a considerable period of time. Once you're able to identify a trend, no price is too high to buy and no price is too low to sell. A trend following system goes with the flow of the trend, and the trend continues until it gives you a sign that it is ending. The trend direction depends upon the time frame we use to trade, but a trend following system uses higher time frames because it's concerned with the big picture trends rather than the intraday trends. If you want to maximize your profits, the larger trends offer bigger profit potential. To see a trend following system in action, take a look at this simple chart, which shows the relationship between your losses and your profits when using a trend following approach. You'll notice that the losses are limited at a certain level, but the potential profits are unlimited. This is the core principle of how a trend following strategy should work. In essence, this is where the edge of a trend following system comes from the ability to cut losses short and let profits run when we have a strong trend. The most basic and one of the most popular trend following systems is a combination between two simple moving averages, or simply using one moving average like the 200-day EMA, which in technical analysis is regarded as one of the most important moving averages. This simple trend following strategy incorporates all the requirements presented in this course. On top of that, we'll have to use the trend following strategy in conjunction with the trend trading techniques highlighted throughout the previous modules. These are the rules of the 200 EMA trend following system. In an uptrend, defined by a series of higher highs and higher lows, look for the price to trade above 200 EMA. Wait for one successful retest of the 200 EMA. Initiate a long position or buy if we close above the 200 EMA. Place your stop loss below the 200 EMA and below the most recent low. Take profit once the price breaks and closes below the 200 EMA. I'm showing you this trend following strategy just to demonstrate one of the ways you can trade in the direction of the trend. Here are two examples, both long and short trading signals that show the trend following system at work. The price is above the 200-day EMA, then pulls back to touch it. The price then touches the 200 and closes above it. That's our buy signal. As you can see, the price then moved up from there. We closed our fictitious trade when we got a daily candle close below the 200 for a nice stress-free profit. And here the price moved below the 200-day EMA and began trading under it, signaling a shift in the trend. When the price retested the 200 EMA and closed below it, that was our sell signal. You can see that the price continued to drop after that. We eventually would close this when we saw a candle close above the 200 EMA. A trend following system typically has a winning rate between 30 and 50%, but even with such a low winning rate, we can make tremendous amounts of money because you only need one big trend to not only recover all your losses, but to also end up with a big profit. Trend followers know that it's the big trend where all the money is made, and by using a mechanical approach, they are able to systematically pick the winners and cut the losers. That's the most effective approach to maximizing your profits. It's no secret that trend following is one of the most popular trading strategies among hedge fund managers, and that's reason enough to get you interested in a trend following mindset. And that's it for today's video. Next week, we'll look at mastering one of my favorite indicators, the average true range, or ATR. This Friday, I'll be taking a break and won't be doing the strategy of the week video, but I will be back next Monday with a couple of trade picks. And don't miss the next installment of the Trading Education series next Wednesday, when we'll discuss mastering the ATR indicator. My videos come out at 3 p.m. New York time on those days. Don't hesitate to ask any questions you may have. Remember, the only stupid question is the unasked one. If this video helped you, smash the like below. Subscribe and hit the bell if you want to be notified of our videos in the future. And I want to wish a Merry Christmas to everyone who celebrates that holiday, and a happy holiday season to everyone else. We're finally coming to an end of this weird year 2020. I think 2021 looks like it could be awesome. Remember, I suggest you not take any new trades for the next couple of weeks as the market will be very thin and whippy. All right, guys, have a great Wednesday, and I'll see you on Monday.